Welcome to the Forensic Financialist, where we simplify business and leadership challenges and choose the road that leads to wisdom and excellence. We discuss tough issues facing business and figure out easy-to-implement solutions. Using the REARview mirror approach, we look in the rearview to move towards a brighter future. Here's your host, Jeff Newkirk.
Welcome to the Forensic Financialist, where the aim is to improve your business and help you grow both personally and professionally. I'm your host, Jeff Newkirk. Today we are going to talk about the E in the REARview mirror approach, and that is examine, step 2. You may remember that REAR stands for review, examine, adjust, revise, and realize. If you recall last time, we talked about the first R, step 1, the review step, and the best way to approach the review step. Now remember, we are attempting to do a simple business assessment here from a financial perspective. So in the review step, we talked about 3 key measures that you need to be comfortable knowing and reviewing on a regular basis. Those 3 include your cash balance, net income, and working capital. Now, for details on how to find those measures, refer back to our last episode, episode 2. But for today, it's all about examination, step 2. But before we get into this step, I want to remind you of the importance of perspective. In today's world of COVID fear and increasing crime, let's take a step back and put everything in proper perspective. How do we do that? Well, we reflect on all that we have and all that we can give. And to really emphasize this point, I want to talk about a high school football coach from the Chicago area. His name is Troy McAllister. I love this story for lots of reasons. First, it's high school football, and I love high school football. Second, it's in Chicago, my hometown where I grew up. Third, it's about doing the right thing and making a difference. See, Coach McAllister grew up in a small town in Ontario, Canada. He played high school football there, and then went to college and played football there as well. He showed up at Phillips High School on Chicago's South Side in 2010. That's where he began his coaching career. I'd say that's a pretty tough place to start. According to all reports, the school was in bad shape, and the football program was even worse off. Coach McAllister had only 12 players show up for his first practice, barely enough to even play the game. It didn't look good. And this high school had some pretty famous alumni too, including one of my favorite singers of all time, Mr. Nat King Cole. Okay, but let's fast forward now to 2015, 5 years after Coach McAllister's arrival. He didn't quit, not at all. In 2015, the Phillips High School football team went 14-0 and became the first Chicago public school to win an Illinois state championship since 1974. Okay, even better than that, the Phillips High School senior class had a 100% acceptance rate to colleges, and the graduates earned more than $5.4 million in scholarships. That is pretty successful. So when life is getting you down, when you think the extra effort just isn't worth it, think of Coach Troy McAllister and the Phillips High School football team, and what a success story that is. Every bit of effort is worth it. Thank you, Coach McAllister. Now, let's talk about the REARview mirror approach to business assessment. We went through this last episode, but just as a gentle reminder, REAR is a friendly acronym that stands for Review, Step 1, Examine, Step 2, Adjust, Step 3, and Revise and Realize. That's Step 4. In Step 1, we were able to determine the current state of our business by conducting a review. We looked at the 3 critical measures: cash balance, net income, and working capital. In Step 2, we are going to answer the questions of how and why. How did we get to our current state, and why? Let's really simplify now, so this is not overwhelming and you can feel comfortable repeating this process. When you look at the cash balance, you can either just look at the current amount or compare it to another measure. I definitely recommend comparing it to another measure. And for cash, I suggest that you compare the current balance to the previous month's balance. And it's even better if you have a budget, so you compare it to budget. But we'll discuss budgets in another podcast. Okay, so now you're examining the how and why of your current state cash balance. And as you recall from the last episode, I suggested 3 sources to review your cash balance. Number 1, the current balance on your bank accounts. Number 2, the ending balance on your statement of cash flows. And number 3, the cash on hand line item in your balance sheet. In Step 2, we want to answer the questions how and why. In order to find our answers, we need to do a little investigating. Let's consider our first source, the current balance in our bank accounts. If you use QuickBooks for your accounting software, you can simply log in to your account and go right to the dashboard view of your QuickBooks company. The dashboard view will show your bank accounts along with 2 balances. So that's 2 balances for your bank account. The first is your bank balance. If you have your QuickBooks linked to your bank, which I hope that you do because that'll make your life so much easier, then just be sure that your bank balance has been updated so it's as current as you can get. If it hasn't been updated, just click on the account and then click Update. The second balance that's shown is the QuickBooks balance. Now, these 2 balances should be equal, but if they're not, don't be too concerned. There could be a time lag for a bank to clear a check or a payment. So, now you have reviewed the cash balance by looking at your bank accounts. And if you don't use QuickBooks, that's okay. Any accounting software should provide the same view for your cash balance in your bank accounts. Now, if you can, compare this balance to the previous month's balance. And again, if you have a budget, that would be even better. If not, just compare the current balance to last month's balance. If the current balance is less, then you spent more than you took in. That means if your cash balance now is less than what your cash balance was at the end of last month, you have spent more than you have taken in sales or revenue. Your cash outflows were greater than your cash inflows. Now, that may be okay, but it really depends on what you expected during the period. So if you were expecting some big expenses, then maybe it's okay that outflows exceeded inflows, and that's not a huge concern. But if you didn't have any big expenses planned, then you really need to look into this a little bit further, because if you continue to have outflows exceeding inflows, well, you know the answer. You're going to run out of money, right? That's not good. Now, I mentioned 2 additional sources to determine cash balance. the ending balance in your statement of cash flows, and the cash on hand line item in your balance sheet. Accurately noted, these two sources will provide you with your current cash on hand. However, in the examination step, step 2 of the rear view mirror approach, it will be impossible for you to answer the questions of how and why just by looking at the balance itself. So we need to do some digging. The statement of cash flows is made up of 3 sections: cash flows from operations, cash flows from investing, and cash flows from financing. We are going to focus on cash flows from operations. This is where we can make the most immediate impact on cash from the core functions of your business. Now, I want you to look at the net income line item in the cash flows from operations section of the statement of cash flows. This should equal the net income or bottom line found in your income statement. Now we can start to see where some of the cash inflows and outflows occurred during the period. Remember, there are 2 parts to the equation: cash inflows, cash coming in from sales. That's good. Cash outflows, cash going out of your business to pay bills like utilities or even payroll if you have employees. Now, I don't want to say that's bad, but that's going to take money out of your business. The examination step suggests that we need to do sort of a deep dive into the components of that equation: cash inflows versus cash outflows. So then we can see exactly where our money is going. Once we look more closely at the inflows and outflows, we can begin to answer the question of why we have the current balance that we have, as well as how did we get here. Now, we're talking about the examination step, step 2 of the rear view mirror approach to business assessment. And in this examination, we were addressing cash balance. I want to make sure that you know that step 2 is appropriate for any part of your business, any part that warrants further investigation or examination. For example, in your review step, step 1, if you found that payroll was way out of whack, it was not at all what you were expecting, well, then you would conduct an examination of your labor expenses for that period. Additionally, you may find that your accounts receivable were exceptionally high last period. Well, to find out why, examine the details of your accounts receivables. Maybe you sold more items on credit than you planned. Or maybe customers have continued not paying, so your receivables are adding up and increasing month by month. So now you can see that the examination step will really be based on what you find in step 1, the review. You might need to conduct several examinations, depending on what you find in the review step. I want to emphasize how important this step is in the rearview mirror approach. Examining the details of your situation is the only way you can make good decisions to move your business forward. Information is critical. Accurate information? Well, it's the lifeline to good decision making. Examining accurate information, that will lead to great future success. Wow, we have covered a lot in today's podcast. I hope you got at least one nugget of useful information that you can use immediately in your business. So that's a wrap for today. I'm so grateful that you listened. If you want any additional information, please don't hesitate to reach out to me at www.pembusinessconsulting.com, or you can just email me at info@pembusinessconsulting.com. I'm so glad that you were with me today. I hope your today is better than your yesterday, but I know that your tomorrow, it's going to be even better than today. Peace, everyone.
You've been listening to the Forensic Financialist, where we simplify business and leadership challenges and choose the road that leads to wisdom and excellence. To learn more about Jeff, visit his website at understandablesolutions.com or email Jeff at jeff@understandablesolutions.com. Mentioning this podcast will get you a complimentary discovery session with Jeff. Until next time.